We're news for business people.
Good morning, you're watching Daybreak on Bloomberg Quint and I'm Alex Matthew. First, the headlines. Asian stocks start on a positive note after US tech stocks rally overnight. US President Donald Trump hopes to ink deals worth $250 billion in China in a bid to reduce the trade deficit between the two countries. Bankers get set to hold marathon meetings in the latter half of November and early December as they look to find a resolution to the 30 stressed accounts identified by the RBI. Tata Motors, HPCL and Pharma are the three Nifty companies coming out with their earnings today. And let's shift to the international markets and to the US markets first. A surge in technology stocks more than compensated for weakness in financial counters, and the benchmarks hit fresh lifetime highs in yesterday's session. Julie Hyman has this report.
U.S. stocks ended the day little changed, bouncing between gains and losses throughout the session as there was a push-pull between some large-cap tech stocks on the upside, Apple rising, for example, and banks like Bank of America and J.P. Morgan to the downside. So all of that not equaling much change when all was said and done. Investors continue to watch the debate over tax reform, that now informed by the outcome of elections in the United States on Tuesday that largely handed victories to Democrats, which then led some market watchers to speculate that that could affect the tax reform debate. And that, in turn, put some pressure on some stocks, especially those in the financial sector. Consumer staples also leading gains to the upside, so that also helping with that balancing act. And in terms of some notable movers throughout the session, MGM Resorts reporting its earnings and rising on the day. The company also saying bookings have returned almost to normal in Las Vegas following the fatal shooting there that was conducted from that company's own hotel. MGM Resorts, one of the best performers on the day. We also continue to watch the developing story of AT&T's quest to acquire Time Warner for $85 billion. Bloomberg News reporting that AT&T is ramping up its preparations to fight the Justice Department in the United States in court if the agency does sue to block the deal. That's according to people familiar with the matter. AT&T's chief financial officer saying on Wednesday that the timing of the deal, which was originally expected to close by the end of the year, is now uncertain. That sent shares of Time Warner lower on the session. Julie Hyman, Bloomberg News, New York.
Now, US President Donald Trump may announce trade deals worth $250 billion with China. Bloomberg's Tom McKenzie filed this report on the key things to watch from today's meetings.
So we're going to get some of the big CEOs in the room with President Xi and President Trump in the Great Hall of the People. So the likes of Boeing CEOs, Qualcomm, they're all going to be there. So we are expecting, do look for this, deals on aviation, energy sector, agriculture, the auto sector. Again, we had that Ford deal, but we're expecting more around autos. Another big one is a deal that's been being worked on for a number of weeks, possibly months, from Sinopec. It is a big Chinese energy company. Now they're looking to potentially fund pipelines and storage facilities in Texas, particularly in areas that were hit by that hurricane. And that, according to the Bloomberg number crunching, could reduce this deficit that the US has with China by about $10 billion US. So that would be significant. Keep an eye out for that. We're also expecting President Trump to flag this exports of LNG from the US to China, something that he's been working on with his energy sector as well to try to increase the flows of US LNG to China. So these are all things on the agenda. As I say, as yet, we have nothing concrete from the Chinese in terms of real structural changes to this trade relationship, and nothing yet on North Korea, though we may well get that at the press conference later today.
Now, the Asian markets have opened mostly in the green. I say mostly because you have just one benchmark that was trading slightly negative, but the Nikkei has opened strongly positive. It's up as much as 1.1% at the moment. But let's move on to the Indian market now. And Darshan Mehta and Agam Vakil are here to set us up for the day's trade and all that's happened in the futures and options space. Morning, guys. Darshan, first to you. What are the key things to watch today, according to you?
Good morning, Alex. It'll be again a results-heavy day, but for global cues, let's first take a look at how the SGX is panning out. You spoke about how the Japanese markets are surging in trade, but that doesn't seem to be the effect that's happening on the SGX Nifty. It's trading absolutely flat in trade over the past few days. We have seen significant amount of profit booking that's coming on the Nifty, so there is pressure that's being weighing on our benchmark indices. Some of the ADRs, HDFC Bank was up almost 1%. The other ADRs that managed to gain was Tata Motors, which was up almost 0.8%. Vedanta was down almost 2%. But most interestingly, I would want to point out on Taro, which is Sun Pharma subsidiary Taro. Post the numbers came out before market hours yesterday, but there was this conference call that was held yesterday. Post the conference call, it went up almost 15% overnight. So this is Sun Pharma's one stock that you have to watch out in trade today. Crude is trading lower for the second session. It was down almost close to 1% in overnight trade. Even Brent is trading below the $64 barrel per mark. But WTI manages to stay above the 56.50 mark. It's been rallying significantly, so some bit of profit booking. Positive close by the base metals on LME. Apart from aluminium, everything else gained. So copper, zinc, lead, all of them were up anywhere between 0.3% to 1%. Aluminium ended down almost over 1%. And similar is the case with China. Steel is up over 2%, rubber is up over 1% in China. Currently, the base metals are doing well. Aluminium is down 1.5% in China also. So that's the trade setup. Gold is trading higher by almost, it's trading flat right now, but was up almost 0.5% in overnight trade. Let's take a look at how the fund flows were there. FI sold in almost 3,800 crores, and this obviously will include the Bharti Airtel block deal that happened. And DI has bought in another 3,000 crores in the cash market. So on a month-to-date basis, FI still remain net buyers to the tune of almost 4,400 crores, and DIs were net sellers to the tune of 363 crores in the cash market, given the fact that yesterday was this big buy figure that came out on DIs. Let's take a look at what contributed. The Nifty Wix continues to inch higher. It was up 10% yesterday, another 3% up higher today, moving to the levels close to 14. The Nifty, IT, media and pharma stocks, all of them moved in much higher in trade. What was seeing weakness was oil, metal and PSU banks that saw a significant amount of weakness. Let's take a look at the contribution. The Nifty was down almost 50 points. Axis Bank, remember on 10th, tomorrow there will be this big board meeting for fundraising, so that was in focus. Again, money coming back into defensive, Asian Paints, TCS, Tech Mahindra. And on the losing end, you had the banks as well as oil stocks. So Reliance for the second day in a row is leading the fall on the Nifty. ICICI, SBI, HDFC. So banking and non-banking financials were the ones that actually caused the Nifty to crack. So 47 points down Nifty. Agam, what is the cues indicating? Could there be more call writing or put writing that we can see on the Nifty?
Absolutely. Given the fact that we've seen the Nifty come off to a certain extent, another 47 points lost on the Nifty and still holding on to 10,300, as you can see, we have seen very little change there in terms of open interest, of course. And when it comes to the Nifty Bank too, while the index has moved down by as much as 0.5%, we have seen an addition of nearly 1%. But coming down to the India Volatility Index, as Darshan was speaking about, we have seen a further increase there. This means that there are more players out there who are buying calls as well as puts, because of which we're seeing option premiums expand. Now, given the fact that Nifty came off to a certain extent, we saw the PCR also fall to 1.36 from 1.43. But in terms of changes in open interest, and this is where Darshan was talking about, while we have seen more writing in the 10,400 and the 10,300 calls, unwinding was seen in the 10,400 put as well, and that's where you're looking at the big changes. A lot of changes in stocks which are entering and moving out of the band too. So we have Jet Airways, which has moved into the band. On the other hand, Walcott, as we had pointed out yesterday, it has moved out of the band. We saw near 40% unwinding in Walcott. That's the reason why it's out. And of course, in terms of other counters, large cap stocks continue to remain in focus. Bharti Airtel, looking at fresh shots, it was quite a day for Bharti Airtel. On the other hand, And when it comes to Tata Motors as well, we're expecting earnings today, so we'll be watching out for that. But fresh shorts already building up, so traders perhaps know something that we don't, but we will be watching out for Tata Motors going into.
I like the way you put that. We'll be talking about Tata Motors just a short while from now. Before we do, though, let's take a check on the rupee and the bond market now. The Indian rupee on Wednesday rebounded from a 2-week low and ended marginally higher against the US dollar, supported by gains in Asian currencies. Saloni Dhanuka is here with more details. Saloni?
Absolutely rightly mentioned by you, Alex. It rebounded from fresh 2-week low and it ended marginally higher at 64.96 levels against the dollar. Now remember, the home currency opened weaker at 65.15 levels against the dollar. However, it washed out initial volatility and made a smart recovery during the day and ended 0.1% higher against the dollar. Now most Asian currencies were trading mixed on the back of uncertainties regarding US tax reform policies and also because of rising crude oil prices. Now coming back home, dollar rupee is trading flat in the non-deliverable forward market, which indicates a flat opening for rupee in today's trade. Moving on to bond market, the 10-year benchmark yield ended 1 basis point higher at 6.94%, its highest level in over 6 months. And lastly, global funds reduced their rupee debt holdings for the third consecutive session yesterday. They decreased their debt portfolio by approximately 550 crores according to NSDL data, Alex.
Right. Thanks for that, Saloni. Now, oil prices slipped in yesterday's trading session after a surprise build-up in crude inventories. However, they have marginally recovered early in the morning. Jayesh Kinlani joins in with the latest updates there. Jayesh?
Morning, Alex. So we are seeing some bit of uptick come about for oil prices after a 2-day slip. Now this was on the back of an unexpected inventory build-up which came in at a highest level in more than 3 decades. So if you look at the crude inventory, it rose by about 2.24 million barrels for last week as per a report by EIA. Now Citigroup has come out with an interesting note in which they say that OPEC is likely to disappoint the oil bulls during the November meeting. So we'll have to keep a watch out on that one. But oil prices, Brent is trading above the 56 mark and WTI above the 56 mark and Brent above the 63 mark. As far as base metals are concerned, we saw some bit of positive bias come about for them. Most of the base metals saw an uptick of about 0.4 to 0.8%, except for aluminium, which declined as much as 1%. Copper futures were in focus on account of a weaker dollar, which declined 0.1%. Global copper market may be in deficit in going into 2018 as per a comment by IWCC. We are seeing similar cues come in for the Shanghai Futures Exchange, where the base metals are trading with a positive bias, with steel leading the gains up about 2%, and it is actually trading at a 2-month high. Moving on to gold prices, we are seeing some bit of stability come around the 1280 mark, and also that near the 1280 is the 100-day moving average. So some bit of stability coming in over there.
We'll leave it at that, Jayesh. Thanks. Now, moving on, bankers are gearing up for a meeting to resolve the cases in RBI's second list of stressed accounts. The deadline to resolve these cases is December 13th. Vishwanath Nair, who filed this report, is here to tell us what is on the agenda of this meeting.
The Indian banking system is gearing up for a round of marathon meetings to be taken up in the later part of November and the early part of December. This is pertaining to the second list of stressed accounts that the RBI had sent to the bankers in August. These accounts, which there are about 30 or 40 of them in the second list, they are slightly smaller than the first list of 12 stressed assets which were sent to bankers for immediate action under the Insolvency and Bankruptcy Code. The bankers have time till the 13th of December to resolve these cases with the available restructuring tools, failing which all of these cases will automatically go to the NCLT for insolvency and bankruptcy proceedings. Now what the bankers will be looking at is various tools that are available to them: SDR, the strategic debt restructuring tool, S4A, and even some form of deep restructuring wherein they sell some portion of the assets and restructure the remaining accounts. These are all available options, and they will be looking at these options so that they can resolve these cases outside the NCLT. Now the NCLT as such is not shut off to the bankers till the 13th of December. They can go to this route if they feel that nothing else is working out. But typically the provisioning that is required for cases under the Insolvency and Bankruptcy Code is higher. Companies which go to this case, the bankers have to provide about 50% of the secured exposure in those companies and 100% of the unsecured exposure in those companies. So bankers are typically wary of going through the Insolvency and Bankruptcy Code. However, what is happening is the government has announced an over 2 lakh crore recapitalization exercise for the public sector bankers in India who control a large part of the debt that is in question. So they will be in a better position to negotiate and thereby write off some of the bad loans which may be discussed over these meetings.
Right. Moving on to earnings now. Petronet LNG reported a strong second quarter. The growth in net profit was aided by higher other income and low tax outgo. Somit Sarkar is here with all the details there. Somit, volume picture is also looking good.
Yeah, volume pictures are looking good for the company. Now, on a standalone basis, Petronet came out with a strong set of numbers. Revenue, net profit, EBITDA, all ahead of analyst estimates. Revenue was up 21% to 7,770 crore rupees, while net profit was up 35% to 589 crore rupees. Now, EBITDA was up 21% to 899 crore rupees, while the margins expanded by, while the margins remained flat at 11.6%. Now, sequentially, higher gas volumes led to revenue beat. Now, gas volumes were up around 15% to 220 TBTU in this quarter. Volumes were higher because of the higher demand coming in from the gas-based power generation companies. Now, EBITDA beat was on the back of lower employee cost. Employee cost reduced by around 28% compared to last quarter, while net profit was beats estimate on the back of lower tax outgo and higher other income. Now, other income was higher by 44% compared to last quarter, while tax as a percentage of profit was just 31% compared to 34% in the last quarter. Now, factors that we'll be watching out for would include the utilization levels of Dahej and Kochi plant and their the management outlook on the same. Also, we'll be watching out for commissioning and ramping up of the Kochi-Mangalore pipeline. Along with that, spot volumes and marketing margins on spot volumes would also be a key thing to watch out for.
Thanks, Amit. Now, moving on to the auto space, Tata Motors will announce its Q2 earnings today, and Yatin Mota has all the key numbers that you have to watch out for.
For Tata Motors, this time in the second quarter, we are expecting healthy performance coming in from JLR as the foreign exchange related losses narrow for the company. Of course, on a consolidated basis, the situation will be challenging, at least on the operating front, wherein we are not expecting good growth coming in. As far as the revenues are concerned, we are expecting the top line to be close to 68,900 crores, a growth of 5% year on year. EBITDA growth will be seen at 7% on an absolute basis. Margins more or less should remain stable on a year on year basis. However, profits should see a sharp jump because of one-off last year same quarter. Profits are expected to be 1,850 crores for the consolidated entity. But clearly, if you look at the standalone business, the losses there will continue. Brokerages are expecting a 600 to 650 crore kind of a loss for the standalone domestic business. Of course, because of the improvement in volumes, we could see some margin improvement for the standalone business. But the focus area clearly will be Jaguar Land Rover, and JLR revenues are expected to increase 6% for the quarter on a year-on-year basis. However, the EBITDA or the margin performance will be closely watched for. This time we are expecting the EBITDA margins to be close to 10.8%, improvement of 50 basis points year on year. And if you look at brokerages like Kotak and Nomura, most of them are expecting a foreign exchange loss of 350 to 450 million British pounds. So that is something important we'll be watching out for. Of course, the margin trend for JLR is something important everybody will be watching out for in the management commentary. On overall basis, expect a muted quarter for Tata Motors on a consolidated basis this time.
Right, and Aurobindo Pharma is the second Nifty company that we're looking at today, and it's expected to post a healthy second quarter. Darshan Mehta is here with the street estimates. Darshan, Renvilla seems to be the growth driver this time around.
Yeah, that is something that will drive the US revenue. So on a consolidated top line, we are seeing a growth of 9%. On the bottom line, we are seeing a growth of close to 13% and an EBITDA growth of 14%. So overall, if you're looking at the EBITDA margin, will come in very close to the 26% mark versus 25% that we saw last time around. Now, as you pointed out, yes, Renvela is one of the big generics that they've managed to bag, and that will contribute significantly, both the tablets as well as the suspension tablets, the suspension that they have. Now, on the tablet front, we are seeing contribution anywhere between $30 to $35 million, and on the Renvela suspension, we are seeing anywhere between $4 to $5 million that would probably come in. Now, there is a shortage of one of the key drugs called pantoprazole that is there in the US. The shortage there will help Aurobindo Pharma. EM and EU will actually be very stable. The conditions were rather stable, so we are expecting muted set of numbers to come in from those two geographies. API would remain flat on lower domestic sales this time around, but the Renvela contribution is something that will aid the top line significantly for Aurobindo Pharma.
Thanks, Sachin. Now, moving on, the country's third largest oil marketing company, HPCL, will also be reporting its earnings today, and that's the third Nifty company we're talking about. Somit Sarkar is standing by with the street estimate. Somit?
Yeah, so HPCL is expected to come out with a strong set of numbers. Now, revenue would be marginally higher to 53,204 crore. Net profit would almost double to 1,996 crore rupees. Also, EBITDA would rise by 97% to 3,200 crore rupees, and margin would expand by 300 basis points to 6% in the second quarter. Now, gross refining margin, that is the key number for an oil marketing company, would come in at $9.7 per barrel versus $5.9 per barrel in the last quarter. Now, this is a sequentially strong quarter for the oil marketing company on the back of higher refining margins, strong volume trends and inventory gains. Now, the company is expecting inventory gains in second quarter versus an inventory loss of more than 1,500 crore rupees in the first quarter. Now, crude throughput is expected to remain in the range of 4.3 to 4.7 million metric tons in the second quarter. The refining performance would be good, but on the marketing side, it could take a hit because of the digital discounts and GST coming in. The petrol and diesel marketing margins in the second quarter were around 2.4 rupees per litre and 2.3 rupees per litre versus 1.6 and 1.7 rupees per litre in the first quarter. However, outlook on the gross refining margin would be a key thing to watch out for when it comes to HPCL.
Thanks so much for that, Somit. Now, on to the stock of the day. Bombay Dyeing has had a very strong quarter in the second quarter this year. Nikki Mirchandani is here with all those details. Nikki?
Good show, Alex, from Bombay Dyeing. If you look at the revenues, that's up by 43% in this quarter at 692 crore as compared to a figure of nearly 485 crore in the base quarter. Net profit, the company has reported a net profit of 53 crore as compared to a loss figure of nearly 37 crore in the corresponding quarter of the previous year. EBITDA rose by 212%. That's a big jump coming here at 153 crore as compared to 49 crore in the corresponding quarter. Also, the margins have expanded at 22% as compared to a figure of nearly 10% that we saw in the September quarter last year. Now, what goes behind these good set of numbers is we've seen a sharp jump in the high-yielding real estate business. That as a percent to your net sales have risen, which is reflecting well on the top-line growth of the company. Now, higher sales combined with your operational efficiencies have led to good bottom-line performance. Now, raw material as a percent to your net sales, that's come down to 39% as compared to 59% that we saw in the corresponding quarter. Also, for that matter, employee benefits expenses that have also reduced in this quarter at 3% of your net sales as compared to 5.50% in the corresponding quarter. Besides that, there was an impairment expense that we saw in the base quarter of roughly around 43 crore, which went behind the low profitability of the number, or maybe the loss figure. It added up to the expenses side of the base quarter. That also is something that we need to, keep an eye out on, or maybe factor in while taking an account of these numbers. Now, if you look at the revenue breakup, a good number is coming in from the retail business. Is just retail or textile business is just about contributing 9% of your overall sales. Polyester business is contributing to 45%, while real estate business has contributed to nearly 46% of your overall stake in the company. And for that matter, shareholding pattern, promoter has really held now 54% of the stake, while public holding in the company stands at nearly 46% in this quarter.
Thanks, Nikki. Now, that was the stock of the day that was picked out for you by Nikki Mirchandani. But what are the stocks in news? Shraddha Babla has a list of them. Shraddha, what's on your list?
Well, at the top of the list is Reliance Infrastructure, which is slated to win a 1,000 crore order from the Nuclear Power Corporation of India, and that's according to a ET report. NCPI had opened bids for the EPC tenders on Tuesday, and Reliance Infra is said to be the lowest bidder, beating L&T and Tata projects. Now, these projects are scheduled to be completed in over a period of 56 months, so keep an eye out for Reliance Infrastructure. The other part, we're also tracking Pricol, which is an auto parts maker. Now, they've entered into a joint venture with a Hong Kong-based company, Zorg Industries. Now, under the JV, Zorg Industries will provide technical expertise, whereas Pricol will be the manufacturing and distribution partner for India. Now, the initial investment has been entailed at about 6.5 crores only, but according to Pricol, this JV could earn or it's targeting revenues of about 100 crores by FY20, and hence and thereafter it is expected to double over the next 3 years. So keep an eye out for that name. HCL Infosystems, they have received a tax demand notice for 312 crores. The company has said they will appeal before the authority. You also have Cupid, which has received a supply contract worth 24 crores from the Ministry of Health. Now, this contract was awarded on competitive bidding. It has to be delivered over a period of 5 years. Now, 24 crores may seem a smaller number, but it seems sizable because if you look at Cupid's FY17 revenues, they stood at about 84 crores. So keep an eye out for that name. But you will also have earnings reaction playing out for Cupid though. And lastly, on the back of bulk deals, we're tracking a company called PDS Multinational Fashions, where Purinju's Equity Intelligence India, which is the PMS, bought about 0.9% stake. Now, it's a company which trades garments and has a market capitalization of 690 crores. So we could see some positive reaction there. So those are the stocks to watch out for, Alex.
Right, Shweta, and we'll keep an eye on them. There's a lot to talk about over the course of the day. Like we said, 3 nifty companies to talk about, and also what comes out of Donald Trump's meeting with his Chinese counterpart. But there are also a lot of stories that you should consider reading on the website, BloombergQuint.com. Here are some of them. First off, the Aam Aadmi Party has approached former Reserve Bank of India Governor Raghuram Rajan, offering him a Rajya Sabha seat. It might not nominate its own leaders to the upper house. The RBI's move to allow transfer of funds between rival mobile wallets that are compliant with Know Your Customer norms is a boon for Paytm as it weeds out the non-serious players in the payments industry. That's according to the CEO Vijay Shekhar Sharma, and he said that in an interview with Bloomberg Quint. Apple is working on a redesigned high-end iPad for as early as 2018 that incorporates key iPhone X features such as slimmer edges and facial recognition. That's according to people who are familiar with the matter. And that brings us to the end of this edition of Daybreak, but all you need to know is up next. Do stay tuned. This is Bloomberg Quint.